Posted a 7.2% distribution growth, that to R1.49 per linked unit. Company also raising R1.5 billion through a distribution reinvestment plan. Norbert Sass, CEO of Growthpoint, is here to unpack the numbers. Thanks for joining us today, Norbert. So I'm just to jump straight to kind of the outlook and new initiatives that you've started during the period. One of them being this undeposit product right now. So just tell us about that, a little bit about what it means for Growthpoint in an environment where potentially, I suppose, the smaller retailers are under a lot of pressure.
Sure. I mean, the market is obviously very competitive, and all the listed property companies and landlords are trying to not only keep existing tenants in the premises. It's a lot cheaper to keep a tenant in your premise than let somebody vacate and then have to re-tenant and reconfigure the space and bring somebody else in. So one of the initiatives we embarked on was what we called the undeposit, and it basically does away with the requirement of some of our tenants, in the main the smaller tenants, who we do in the normal course require to give us about a 3-month deposit, either in the form of cash or a bank guarantee, and we give them the option really to instead pay a small non-refundable fee, and then we release them of the obligation to post the deposit. So they can use that cash in their business. They can free up banking lines if it was tied up in terms of a bank guarantee. Clearly the large tenants, your large listed companies and the major retailers, they don't pay deposits anyway. So it's an initiative to try and differentiate ourselves, I think, from the competition, to offer something back to the smaller client and the smaller tenant.
Is this an earnings enhancer? I mean, or does that fall into CSI initiative, helping the kind of small businesses in South Africa?
There's definitely an element of that, but I'd say the main thing is it's a business call and it's a business decision. So at the end of the day, our historic arrears and our historic arrears write-offs have been quite negligible. We've got pretty good credit vetting, and we're supporting. This product is basically off the back of good historic data, and we felt that as a company we can actually take the risk of foregoing this deposit, seeing that the losses in the past have actually been quite negligible.
Yeah, and of course we've got Mia Kruger from Korea International joining the conversation. Mia, your thoughts on Growthpoint right now, because we were talking about it last week, and the company that you like in the space.
Yes, absolutely. I think the price that's come back from its high points, we've really liked that. We also know that it's had to do a lot with the bonds and how the bonds have been moving. But we think that Growthpoint is, because it's such a substantial part of the index, it's quite a nice company to be able to pick up. It definitely has for us the best portfolio of underlying properties, and we're happy to invest in it. And I actually have a question, Norbert, in connection with the distribution. A year ago you actually forecasted a 6.1 distribution, and where did that outperformance of 7.2% actually come from? Where did it outperform your expectations?
I think across probably all three of the major areas of our business. The three major areas today would be the South African portfolio, the Australian business, and then our 50% share in the V&A Waterfront, where we partner the PIC on behalf of the Government Employees Pension Fund. So it's I wouldn't attribute it to one specific area. Across all of them, we performed well. Vacancies remained lower than perhaps we anticipated. Yes, they have shot up or gone up marginally on a consolidated basis in South Africa from 4 to 4.4%. But I think we potentially anticipated slightly weaker conditions in that space. Got a nice little kicker on from the Aussie, with the rand depreciating against the Aussie. Our like-for-like increase in distributions in rand terms out of Aussie was over 10%. So you're converting a 4% dollar growth into a 10% rand growth with some rand weakness. And again, Waterfront continuing to perform particularly well. Right now the retail, we spoke about weak retail numbers and weak retail sales. Waterfront is sort of defying the market at the moment, with 16% year-on-year growth in turnover.
And fully
at the
let,
Waterfront.
I found very interesting.
And the retail fully let, absolutely. And offices at about 2.4% vacancy, which is way below any other benchmark.
Hotel improvement on that front there, but is that going to improve even further? Because that has really been an area, if you look at the V&A kind of overall complex, that hasn't really worked out. I mean, it hasn't attracted as many people as you initially thought. Is something changing when it comes to strategy on that end?
Yeah, I think certainly hotels. It's early days. It's just turned the corner, and in fact, the kind of numbers we're seeing now in terms of occupancy rates and revenue per room are only reaching sort of 2008 levels. But it's definitely turned the corner, there's no doubt about that. And we certainly do anticipate that it's going to get a bit better. The rand weakness is making it cheaper for international tourists to come to South Africa, and we're hoping to pick some of that up in the hotel turnover, rentals, etc. that we get. You know, it takes a long time to bring new product to market as well. I'm not suggesting for now that, you know, it's imminent. But given that there's probably about a 3-year time frame from deciding to bring some new product to market to the actual delivery thereof, it's probably something that we need to start putting in, you know, on the to-do list to consider whether we add some capacity in the hotel space at the waterfront.
Just on the side where you, with the capital raising through the DRIP offer and then also through coming to market with the equity and the new REIT structure, actually 2 questions. The first one that I want to ask you, that 1.5 billion on your book now in cash, do you have any specific plans for the coming year in acquisitions or getting new properties that you have planned, or are they actually made up from smaller parts?
Yeah, so I mean, in total we raised 4 billion rands worth of new equity during the year, 1.5 through the distribution reinvestment plan, and then in early May we raised 2.5 billion through a placement. And you know, we're always busy looking at opportunities, whether they be acquisition, merger, development. You know, we're very, very busy. We see a lot of opportunities, I guess, because of our size. And nowadays it can take up to 6 months, you know, given Comcom alone is 3 months, you know, but from start to finish can take you 6 months to implement a deal. And you know, once you agree on a price, you're pretty much exposed, you know, for that 6-month period. So we took a view that you know, we needed to, you know, partly hedge ourselves, you know, in terms of what we were busy doing, and raise the cash perhaps early in anticipation of these transactions coming to fruition and happening. And I think, you know, there are a couple of things on the cards. We would hopefully be in a position to announce something, you know, not too far.
Are you spending
from
more
here.
time in Australia? Is that on the cards, because you've got 47 properties there right now and you've made acquisitions? Is this a market that makes sense to get more exposure to and have a greater percentage of your earnings coming through from Australia?
You know, the Australian investment for us has been the best investment I think we've made of any investment, you know, over the last 10 to 12 odd years. You know, probably a bit lucky in terms of the timing, but we still like the dynamics. You know, there are very few places in the world where you can get 7 and 8% yields on good long-term leases, good quality properties, well located, and your incremental cost of borrowing 5-year money is something like 5.25. You know, you've got a very nice big positive spread there. The Growthpoint share, obviously Growthpoint Australia separately listed there, you know, still yielding over 8% in Aussie dollars. We find that very, very attractive, and certainly we'll be spending more money. And we invested another 380 million rand there this year, in fact, by following the distribution reinvestment plan that the Aussie entity offered. And we certainly are keen to continue to support the growth of that business. There's still good opportunities there.